2023 share returns have been safely found only in the biggest tech stocks, the so-called Magnificent Seven. Our chief equity strategist and economist, John Blank, is here now to elaborate on that. John, U.S. stocks recently had their best run in 2 years. They're on pace to have a great run here in the month of November as we speak on the last trading day. What have these big tech stocks meant to the market in terms of the indexes? How much have those indexes risen because of them?
Well, Terry, let's just talk about the NASDAQ right now. I'm looking at year-to-date returns on November the 30th at 35.6%. 35.6%. And that actually, it's a market weight, so that does include these Magnificent Seven stocks you hear about. Now, they are in the S&P 500, but they're not as big a weight, and you've got an 18.5%. So that's literally half. So, and I was looking the other day at the SP Infotech, in fact, was up 50%. So there you got the numbers, 50, 36, and 18. And that just shows you that, if you are not one of those big 7 or 10 stocks in this market, you really are just going sideways or up weekly.
So tech has been a market leader for a while now. What is it about these mega cap tech stocks that keeps pushing the market higher and has this inordinate amount of influence on the market?
Well, Terry, they have business models with their cloud services providers. And you got to remember, Amazon, we all think of as something that a shopper, 20 years ago, but that is Amazon Web Services that's driving the growth. And we all think of Microsoft. We don't think of Microsoft Azure that's driving their growth, and then so on and so forth, all the way, including places like Google or NVIDIA, which provides the chips for those data centers that the cloud sits on. It's all kind of coalescing around. And then, of course, we got excited about the AI boom this year, which is really the software components to be able to use these data centers with massive data potential. So at the end of the day, we've got an oligopoly of cloud-specific infrastructure out there provided by NVIDIA. And then even Tesla, which is part of the Meg 7, is basically an auto AI version because we've got a lot of software in their cars. So it's really just become a scale business in this infotech time we're in.
Do these tech stocks then have more room to run? And if so, how much more room?
Well, if we do estimate revisions, Terry, they do have more room to run. It's just a matter of whether people are going to continue to pay up for them. And that's the real question here now that people are seeing the disinflation going on, whether they're going to start to rotate away from them or stay with them. That's going to be a big question for 2024.
Well, the positives to the market seem obvious. Is there a negative side to this very narrow focus of these 7 stocks going forward?
Yeah, because basically, when a stock market is super narrow, it often tends to be the front stage of a bigger, broader bear market. You got to remember, if nothing else is moving and only these are moving, then when did the people get out of these too, right? So there's 2 ways to think about it: broadening to the rest of the market, or the other way around. These big stocks start to trade, in a malaise type fashion. So there's 2 ways to look at it.
Does the positive influence that these stocks have on the market lessen or eliminate any market risk?
I think they lower it, Terry, because you don't have to follow as many names. You got to own them. And you basically get them on a lot of the indexes because they're market weight. So I think it actually has lowered risk for people, everyday people.
According to recently published reports, global stocks were headed for their best month in more than 3 years. Do these mega cap tech stocks have the same effect and influence on the global markets or just ours?
Well, they definitely are global in their supply chains and their revenue outlooks. But, the global stock indexes, particularly some like, say, an iShares index, generally are in-country listings of stocks. And those get traded, through the U.S. dollar exchange rate and then onto our eyes in our portfolios. So it's kind of a backdoor for the big Mag 7 because it's really their revenues they earn abroad and their supply chain, issues that are entangled in their costs that one gets the globalization, not through the actual indexes.
Looking beyond these top tech stocks, though, investors seem to have been pushing the bank stocks higher lately. Is the worst over for that sector?
We'll see, Terry. A lot of that's just bouncing off lows. With the disinflation of people now beginning to think more, succinctly about soft landing, or at least less worries about deep shocks to growth. And that, people are always going to short the banks when there's recession worry.
You wrote earlier this week that bond rates are going to be setting the direction for stocks here going forward. So does that mean an end to market leadership from these tech stocks that we've been talking about?
Well, it could, Terry. We'll have to see. I mean, problem here is we're on the back end of a supply shock, and we've been riding the story the same way for a number of years now, and it's going to be hard to figure out when a turn happens, and it affects those names particularly. Vigilance is always in case. My guess is, it'll be only in hindsight we'll know when the turn came in.
Well, let's look at some individual names here in the meantime. Strong buy stocks on your radar include XPO Inc., EMCOR Group, and Dropbox.
Yeah, let's talk XPO. I've been at number one rank on this. This is a logistics provider. They do less than truckload transportation, principally in North America. They do, what's interesting is they are really tech focused and building that less than truckload game out. $86 a share, back in 2021, this was $140 a share. Nice momentum run on this stock at the moment. EMCOR is, an infrastructure play, leading provider of mechanical and electrical construction, industrial, and energy infrastructure with a moment on infrastructure. This stock took off in 2022 mid-year at 100. Now we're at 211 and still going up. So if you want to get an infrastructure game that has momentum, EMCOR, and that is the number one ranked stock with an A for growth right now. Then I've got Dropbox, which is, my only play here that's tech focused. What Dropbox is it's a platform that enables users to store and share files, photos, videos, songs, and spreadsheets. This is your typical San Francisco play. $28 a share, Terry. I got 32 back in 2021. B for growth, number one ranked stock, top industry, internet services. Kind of got to like a stock like this also because it's on the momentum run.
All right, that's our chief equity strategist and economist, John Blank, on stock market leadership. And this is going to be it for the year for John and I. We are going to take the month of December off here and maybe celebrate the holidays with everyone else. So happy holiday for whatever it is you celebrate. And we wish you a happy new year. And we'll be back in the new year to impart more of John's knowledge to you. So with John, I'm Terry Ruffalo. In the meantime, check out Zacks 7 Best Stocks for the next 30 days. You can download this just released special report that names these stocks for only $1. Zacks.com/promo is where you go for more details on that.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.